Yeah, good afternoon, everyone, and welcome back to our currency monthly outlook. Last month, we saw there are a lot of events which were lined up and a lot of volatility. I think we are closing in for the year end, and I think going forward, we will see the same kind of volatility. In this month also, month of March. So, we have something lined up very interesting for you. Without wasting much time, Dilip bhai, over to you for this currency outlook for this month.
Thank you, Samir. Basically, as we have seen that the last month was probably not that good for the rupee. After starting the year on a positive note, we have seen that some kind of a Adani saga has bring a foreign fund outflows and rupee again tumbles to the uh, again started the one more year with on a backside. So going ahead, March being the financial year closing, it is very crucial to understand how the currencies market behave and how what could be the outlook for the particularly for the March month. As so many ups and downs, rebalancing from the domestic as well as internationally front, corporates are eager to close their positions. So many things are going to happen in this month. Historically, some of the studies finds that during the March month we usually see the foreign fund inflows, and due to that we are seeing that the rupee on a relatively on a better performance. So since last couple of days, what we are seeing that after some resolutions from the Adani saga, we have seen some kind of a 15,000 crores of inflows, and that will has pushed the rupee from 83 odd levels to again back to the 81 odd level. So this kind of a volatility will remain on the March month is concerned. However, March is another month when we are having the less number of the trading sessions, and due to that, we see that the risk premium relatively on a higher side, while the volatility can see some kind of a surge in few days, and sometimes you will see that the lackluster market movement. So, without wasting much of the time, let's move to the presentations. Uh, la- uh, Last month, what we have seen that, as you can see from the uh, yeah. So as you can see from the PPT, the dollar index being on a positive side, and that has created a pressure among the rupee. But particularly if you are looking on the emerging market currencies, all the emerging market currencies were under the immense pressure. In particular, if you look at on the Japanese yen side, South Korean won, South African rands, all these currencies depreciated sharply. So that has created some kind of a problems for the rupee as well. By looking at the YOY basis, we are able to manage to start the, or you can say the first 2 months are relatively on a positive side, and we are still on a positive side for the so far this month is concerned. So this is because we see that the all the countries, Asian countries, which has got a good inflows as the China reopening has started. The Chinese currencies has appreciated in last 3 months and 6 months, but as you can see that after the valuations get cheaper, the foreign funds again started in the Indian markets, and we have seen that some kind of improvements in the rupee as well. So the thing is that we can see that from the commodity front, all the major commodities, gold, silver, crude, all remain under pressures in the February month. However, if you look at on a YTD basis, gold is still giving the positive returns, while silver is down somewhere around 13%, and crude is on a 4%. That has given some precautions. That has given some cushions to the rupee as well, and we have seen that the rupee is relatively on a stable front. If you look at on the equity sides, what we see that the equities after Adani saga, we have seen that the our market underperforms a few of the Asian markets and European markets. But as compared to the US markets, we will still be on a better place for the February month is concerned. However, if you look at on the YOY basis, our market has underperformed most of the major markets, and European markets were the outperformers so far this year is concerned. Uh, So the biggest worry and the biggest things which has been created or started since this year, probably we can say since October 2021, when the inflation swung to the 40 years high and people start monetary policy remains on a tighter front. Now it is now time to see what's last 6 months dynamic of a Asian countries inflation is concerned. Moving into the India side, what we have seen that some kind of a slight decline in the inflations. We were somewhere around 7% kind of a inflations, and now we are somewhere around 6%. So we have seen some kind of a half a percent kind of a decrease in the inflations. The major thing you can see that the Thailand, which has inflation somewhere around 8%, and they are came back to the level of 5%. So majority of the Asian countries are what we witnessing is the downfall in the inflations. While some of the countries like Hong Kong, Vietnam, these are the countries which are still facing the issues related to the inflation is concerned. But overall, looking at this chart, you can see that the inflations is more or less coming down, and that's could be the positive signs for the particularly for the our Asian economies is concerned. Even after Fed goes on a tightening path or an aggressive path, we might be see the some kind of a softness in the tone from the our central banks, or you can say the Asian central banks. So inflation dynamics is hinting that inflation is cooling down in the Asian side, and that has been giving support to the particularly monetary policy side and indirectly to the rupee, or you can say the local currencies. So Asian currencies will remain on a slightly on a positive front, as we see that the inflation dynamics has been changing since last 6 months, and that are favorable to the Asian economies. Uh, Next things what we are seeing that not only the Asian countries, but on the left side you can see that the US CPI data, urban as well as consumer, the direction has started on a downside. The same is the case for the Europe also, but still they are out of the wood. Uh, for saying something related to out of the wood, it requires a lot to be on a downside. As you can see that the inflation is still far ahead of the central bank's requirement. Here you can see that I have compiled one of the period of 67 to 82 period of the US and UK. The directions for the current is looks like the same, and looking at the directions and previous history, there are probably this year's by end of this year we can see some kind of a inflation's pulling down, and from next year onwards we can see that the Federal Reserves and Bank of England starts moving from the tightening policy path to the neutralizing the monetary policy side. So that will indirectly lower the demand for the dollars and all these things. But still this year is a tough year, and looking at the recent data and inflation's numbers and all these things, the Federal Reserve's not in at all mood to lower the interest rate this year, and probably they will continue to remain on a aggressive tightening side. Both uh, major, you can say the Bank of England, US, Federal Reserves, and ECB, all three central banks are going to be on a tighter side. So this is the one of the most interesting chart. As you can see that the blue line is the federal target rate. Core inflations, which is the CPI YOY changes on a red line, and the one slightly yellowish chart is the head CPI chart. So as you can see that the Fed rates and inflation start on a convergence side. This is the time when the convergence happens. We see that the major changes in the policy stance, and Federal Reserve turn the change or change the stance of the monetary policy. So we are waiting for the same thing as we have seen then somewhere around 2019 kind of a where the convergence had happened, and the Federal Reserve has posed the rate and sustainable long period of time where we have seen that the inflation rate the interest rate remain on a steady side and inflations remain also on a steady side. So there, this kind of a scenarios can be possible in the coming years also. Uh, but as I have discussed recently, the chance of a rate cut in the second half completely wipe out after the recent job data and recent economic data. As you can see that the policy range change basis which was earlier in the July to December 31st, there were a higher chances that the second half we can see the rate cut. But after the January and February data, the chances has been nullified and almost get negative. That we don't see any rate cut or a peak out in the rate this year. Probably next year could be the year in which we see that the rates start coming down from the US, Canada or side. The same thing you can see from the European economy side also at the July to December. We see that there are a higher probability of a rate cut in the second half of 2023 that has completely nullified, and probably right now it's only 10% chances that we can see some kind of a policy stance could be on a lower side. So hawkish stance from the not only on the US or a eurozone, we can see that the UK, Canada, Australia, New Zealand, all the major economies are facing the same issues, and what we are seeing that the second half for the year could not be as good as the market was priced 6 months before. Uh, this is one of the interesting dilemma, or you can say one of the interesting chart in which what could be the scenario if the US rate inflation's rate touches the 6%, right? So here I have tried to cover as many countries data as possible from the Asian sites. Here the green line this is the zero line below which the currency weaken less than historical average, and this is the higher side. You can see that these are the currencies weaken the more than the historical average whenever the Federal Reserve's interest rate, or you can say the 6% 10-year treasury or a short-term treasury yields move. So where we are placed? So we are placed somewhere around almost zero point 0.5 kind of a thing. So we are neither an outperformer nor an underperformer. Uh, this is the line when we can see that the above are the most weakened currency, while majority of the currencies like USD and Czech, Indonesian, Philippines, uh, these are the main currencies which remain slightly on a higher side relative to the average side. While what are the currencies on a weaker side? It would be Euro, Chinese yuan, Taiwan dollar, Brazilian, Korean, South African. These are the uh, some of the currencies which historically has shown that more depreciations compared to the average. So we are still on a better side if even if the Fed rate moves above 6%, or we can see that the 10-year yields rose 30 basis points or more over the next 12 weeks. Now back to the technical side. Before moving into the technical side, let's discuss some of the things what are recent things happened during last February month. First of all, the RBI has raised the interest rate again and 25 basis point. Apart from that, they have uh, also indicated the shifting of their commodity stance. But the thing is that they are still concerns about the inflation side, and the way the communications has been forwarded, they are less worried about the growth as the government has been aggressively spending on the infrastructure sites and many more sites. So instead of the private capex, we are seeing that the public capex has been, or government capex has been seen, and that has been supporting to the growth side is concerns. So another things what we are seeing that the February is the another month when the that foreigners remains on a net sell side. But on a positive side, as we have seen that the budget was there and so many positive aspects from the borrowing sides and we have seen, and the way the capex has been planned for the current fiscals, and the budgeted estimates for the fiscal deficit has been planned, which are probably the achievable. So most of the from the government sides are on a positive side, but will still need capex and foreign fund flows to get the strength in the rupee. So these are the few points which we are seeing in the month of February. We have seen that our manufacturing and service PMI numbers were on a positive side. Majority high frequency data is on a positive side. Recent data of uh, credit card spendings and CASAs and all these banking sites were on a positive sides. So majority on a economic front, we are still doing better and can continue to do good so far as near term is concerned. If we look at on the technical side, what we have seen last February webinar also, the major trend line, this is the 8330 kind of a point, has been creating the biggest hurdle for the USD-INR and supporting the rupee. Along the same side, what we are seeing somewhere around 81, it has been finding support. So if we look at on the period since October to as of now, the rupee has been stuck between 81 to 83.30. The directions, prior direction was on a bullish side, but since October to February, the directions, or you can say the trend, is still on a sideway to neutral side. If you look at on the momentum side, the oscillator has started giving the indications that rupee could be on a positive side, or the USD INR can see some kind of a profit booking, and due to that profit booking we can come to the lower end of the range that is currently placed at somewhere around 81 kind of things. Another momentum indicators, and that is the MACD. It has given a definitely given a negative crossovers and negative diversions. As you can see that here the price has formed the newer highs and almost same highs in the January month. What we have seen that the negative divergence as well as negative crossover both in the RSI as well as MACD we have seen. So that has been indicating that we are slightly on a positive side for the rupee is concerned, and a weakness on the USD INR is concerned. However, we don't see any big appreciations in the rupee. The USD INR could find strong support somewhere around 81, and the major trend reversals can be seen only below 80, while on a major upward move can seen only above 83.30. So these are the probably the range which can continue for the March month as well. However, as we have discussed historically, March is the month in which we are seeing the foreign fund inflows, rebalancing related flows. Apart from that, the worries over the that some of the corporates has been uh, uh, kind of getting the resolution. So we are seeing that there is no big negative news to come in the March month. So there are chances that we can see consolidation same in the range of 83.30 to 81. So this month is again on a pair is concerned, 81 to 83 is the major range which we are predicting. Also, if we look at on the derivative data sides, the option distribution is also on the same side. 81 is the major, 81 to 83. These are the major area where the call and puts has been bought in. So that's are the major open interest has been built at the 81 and 83. Apart from that, what we see that the maximum pain is on a 83 strike. So that is indicating that the 83 could be the biggest hurdle for the USD INR is concerned. Now back to the another pair, Euro INR. What we see that the after reeling from 78 odd levels to 90.57 kind of a level after the ECB turn hawkish, and what we have seen that the negativity which were prevailing in the Euro area after Russia Ukraine war, what we have seen that the energy crisis and food crisis and everything that has been setting down, and what we see that the European economies also started recovering, and ECB also started giving the hawkish kind of a statements that has supported the euro in the period of October to somewhere around January. And again we have seen that the as the market is started pricing 4% interest rate in the from the ECB side. So that's also indicating hockey stance from the ECB. And if you look at on the technical side, what we see that somewhere around 86-70 kind of a level where there is a minor support is there. We also see that the after railing from 78 odd levels to 90.60 odd levels, there are higher probability that we can retrace kind of 50%, and that 50% retracement comes in the area of 84 to 85 range. So that is the probable area which where we can see some kind of a pullback started coming from the 84 to 85 range. So that are the area when the aggressive buyer or contagion buyer can emerge. Uh, for the time being, we see that some kind of a profit booking can be seen in the euro, and in that profit booking, we can see somewhere around 85 is the level where one should create the fresh long as the overall trends remain on a positive side, and this is probably the 50% retracement of the previous rally. Uh, as compared to the euro, pound is on a still on a weaker side. As you can see that the even after railing from 84, 85 levels to 102, but the recent chart formation, as you can see, there is a flag formation is happening, and usually the flag pattern is the pattern where we can see some kind of a extended period of a sideway markets, and in that sideway market 102.50, and on a downside somewhere around 90 sorry 97 kind of a level remains for the longer period of time, and in that after the consolidations we see the trend directional move. So as the previous trend is on a bullish side above 102.50, there is a bullish flag breakout, while on the flag formation supports, or you can say the horizontal uh, channel supports, lies somewhere around 97. So for the time being, 97 to 102.45 is the range, and in that range we can see that the pound can consolidate. Another pair, JPY INR, as this week there is a uh, policy for the Bank of Japan, and we see that the new governor will be appointed and the nominations has already came. So that has created some kind of a extra volatility in the month of February. We have seen that the yen started depreciating after the nominations of the new governor, and that's the reasons we have seen that the rupee also appreciated against the uh, Japanese yen. But as you can see that the formation of lower top lower button that was started since long has been uh, reversed, and we have seen that the after 54.73 one of the prior high was crossed. So there are chances that the we can see the trend reversal by forming the bottom somewhere around 59. So that would be the uh, probably the higher highs conditions will satisfy, and there we can see some buying emergence of JPY INR. For the time being, it is still on a the profit booking side, and we can see level of somewhere around 58 to 59 kind of a range. Again, back to the dollar index, the basket of six currency. What we see that the 20 weeks moving average is being the short-term hurdle for it, and as we see that the there is a negative crossover which we have seen in the October is still in place, and as long as the dollar index tradings below 105.50, their near term trend remains on a downside. Again, on a euro side, the reverse has been seen. 20 days, 20 weeks moving average is acting as a strong support, and what we have seen some kind of a bounce. So as long as 101.05 holds, there are higher chances that we can see some kind of a positive trend in the euro. While in the same way, if you look at on the dollar index side is concerned, as long as it trades below 105.50, there are some kind of a negative trend. And uh, from the pound side, as we already discussed in the JBP INR, since last 5 weeks, it has been almost on a flat side. So directional, we don't find any directional view at the current juncture, and wait for the levels of 1.2448 to cross, or 1.17 to break on a downside. So as of now, we are on a neutral side for the pound is concerned, and we don't see any uh, major breakout or a breakdown in the near term. So still one should look at on the level side, and whatever the level gets triggered accordingly can create the positions. The same things after the appointment of the new governor, yen has started weakening from the 127 to 137, so almost an 8-9% kind of a depreciation has came recently. But as you can see that the trend has been reversed, and there are higher chances that somewhere around 140 kind of a things we see that again yen starts on a downside. So particularly yen start appreciating, and the pair will see somewhere around 140 143 is the near term resistance for the pair is concerned. Uh, what should be the look at on the this month is concerned? These are the calendar of the month. We have a holiday tomorrow, but on a Wednesday we have a Europe side a GDP. This week we have a three job data from the US: initial jobless claims, jobs, ADP employment, non-farm payroll. So this week after holiday, we see that the surge in the volatility at the domestic front. Again, we have on a Friday we have a Bank of Japan's policy meeting, where we will find that the stance or on a yield curve control kind of a thing can be looking for that, just because after the nominations of the new governor there could be the chances that so much unwarranted things or unexpected statements from the governors can come, and that will bring an extra volatility in the yen is concerned, and indirectly that will bring the volatility in the other pair also. So next week we have a CPI, then ECB monetary policy, then again on the third week of the March we see that there is a holiday in the Japan, and we again have a forex market holiday on the 22nd. However, the equity markets will remain open. This is the bank holiday, so the forex market will remain closed. On the same day, we have a FOMC meeting. The impact of the same can be seen on the Thursday. So there are so many blackout periods during the month. So expecting the way the volatility remain on a calm side in last month, again we see that the March could be the month in where the wall premium can surge. This will end my presentations over you. Over to you, Samir.
Thank you, Dilip bhai. I think once again a great presentation, up to the point, very crisp. Before I start, if anybody has any question on the right hand side, you can see a tab of questions. You can post your question, and as time permits, we will definitely address the questions. Thank you, Dilip bhai. Like I said, very crisp presentation. Currently, the month, once again we are expecting, some range bound movement with a bits of volatility. Some kind of inflows is expected due to some, on Indian front, the market looks stable actually with some of the corporates. We saw a lot of volatility. It looks like it is settling down now. Uh, so the currency market also got some lot of impact with the respect to that particular activity. But going forward, the data which Dilip mentioned in the last slide of the presentation needs to be taken care of. A lot of truncated weeks. Tomorrow also we have a holiday, and going forward also for the Gudi Padwa on 22nd also is holiday. So truncated month, and also a crucial month in terms of the year ending, the financial closure. So one needs to take the position very carefully. Assess the market on a daily basis. Lot of events. How one can trade with HDFC Securities? Very simple. We have a great in-house research team which comes out with a very proactive calls with respect to all the currency pairs. Uh, Also, if somebody wants to trade by themselves, they can log in with the ITS and they can definitely do that. uh, these are the things which we are offering. One of the important thing, just to inform, we will be soon coming up our trading platform on mobile app also, and I think that will be one of the great convenience for the client. This was long due, and I think that one aspect which will be coming very soon, so probably it will be of more convenient. Apart from that, we have our reports on a daily basis, weekly basis, monthly basis, which we do. If some of the clients wants to take the activation of currency, it is very simple. You just have to log into our website www.hdfcsec.com, and you can go on the derivative segment and easily by uploading simple one financial document, you can easily access the market. There are no joining fees with respect to currency segment activation, and you can easily access the market. It's very simplified. I think great one to look forward to, and hopefully we'll have some less volatility. I think I'll just check if there are any questions. So I think there are no questions, and I think we are running also out of time. So we'll end our presentation over here. We'll connect with you once again in the new financial year in the month of April with the next year's outlook also. How the market turns up this month, how the inflation, one of the key words for the year, we'll hear it long more than ample of times, and how the central banks react to it. So that's it from our side. Dilip bhai, thank you so much once again for your crisp presentation, and thank you
Thank you,
everyone for
Dilip.
joining in. We'll resume this on the next month in the new financial year. Thank you so much.
Thank you. Thank you all for joining, and we'll meet again on next month with the new perspective. Uh, Thank you, sir.